And then, Domenico, you went on to say, when you do a naked put, you don't avoid earnings. Well, when I do bull puts, I do. And let's just go into the search here. I'm sorry, naked put and search. And what he's referring to is the picks of the day here. So, sorry, let's go to the weekly picks of the day first, Domenico. And in this case, the weeklies are avoiding earnings between now and expiration because you're so close to the price and you're trying to do shorter term with a good premium, but you don't want to get caught with one of those ones that falls 7% and you take a big loss of 6% or 5% on the position, okay? So the weekly is avoiding the earnings between now and expiration. On the monthly picks of the day, it's not. And why is that? Well, if we go to the monthly picks of the day, you can see the structure here and what Ernie talks about his process for the back testing, what he did, and what it resulted over the testing period. And he even states here, these naked puts remain more speculative than many investors would use because the high IVs allowed. Trading and testing result doesn't mean anything going forward. Of course, we all know that. These results are based on the exiting the position if the stock falls. Intuitively having a stop loss is determined. And you might want to consider buying a put. I think he says at one point in there as well. Okay. But what Ernie found, what he did with this on these iterations, is that with the weekly naked put picks of the day, he found out when he included earnings, the results were not so good. But on the monthlies, it actually worked out better to include them during that testing period for the monthly naked puts. And I believe he states that in there of what his testing process was and things that he found that were what we expected and things that we found weren't expected and might be in the covered call discussion as well. So that's why. It was because this showed the best return in Ernie's testing cycle. But if you are more comfortable, as we just showed, Domenico, of course, anytime we can do this, I can go into the search. I can pull up Ernie's default monthly picks of the day. And I can say, okay, I like what he's doing so far, but I just don't want to take the chance, even though he tested it. And there's nothing wrong with that. I want to be safe. So what I'm going to do is take the defaults. I'm going to check the box for not between now and expiration. I'm going to save it. And we're going to call it my monthly picks of the day. If I could spell monthly correctly and not hit the wrong key. I'm trying to avoid the wire from my headset there. So, all right, my monthly picks of the day. Okay, now, we can't say to you what exactly your expectations naturally should be in that case, meaning that I don't know how much better or different this is going to be than what Ernie tested over the same time period or recently in that case. But if it makes me feel comfortable, I like some of the names in here. I like some of the ones I'm seeing. I was thinking about doing another married put on DHI. I did one a couple of years ago, but it's kind of out of my price range now until I close a couple more positions, which I'm going to look to do soon too in the Fusion portfolio. Nothing that I'm in right now. Marine Max keeps coming up over and over. HCO, I keep seeing that on different searches that I'm looking for that match my criteria, bull puts and married puts as well. So that's one that consideration. Okay, so those that have been back tested. I'm sorry, Domenico's follow-up question. What other screeners that have you back tested? The monthly picks of the day, naked puts, and covered calls. Okay. And actually, most of the searches in the covered calls and the naked put, the other ones have been tested. We run tests occasionally for the in-the-money covered call and the at-the-money. I haven't done a simulated CDs one in a while. As you've heard me mention, my preferred approach for bull puts is this bull put weekly. That has been tested and traded extensively. But yes, it's tested. It's been tested, and it's working exactly how it should for what my targets are. They don't have to be your targets, but for my targets that's been working. Also, the initial values. It's a monthly bull put screen, but we offer that in case someone wants to do monthlies instead of the weeklies, have maybe more opportunities and more stock selections. This isn't as profitable the last couple times I've run it as the bull put credit spread, weekly bull puts, excuse me, Domenico, weekly bull put credit spreads. In that case, it hasn't been as successful, but that's what you expect, right? If I'm doing weeklies and I'm selling every 2 weeks out in time versus every 30 days, we'd expect a higher annualized return. And that's what we're doing with that as well. And a quick follow-up question before we get to Steve in there. Oh, okay. So I've also tested the calendar spreads, the collar spreads, the default collar spread, the initial value collar spread, excuse me, the initial values on the calendar spreads. It's not as great, but it's still profitable when I run the tests on it. I'm always looking to improve that one. Calendar spreads are love-hate relationship with me. I love them. I love trading poor man's covered calls, as we talked about. I just use the term diagonal spreads. Some months are really good. Some cycles are really good. Some I just have a mental lapse on, and I'm just not as successful, or I'm losing a little bit of money when I should have been successful. And I've been trying to fine tune a proper approach for calendar spreads, but every time I think I've got it, the volatility in the market changes. Everything in the market changes. The premiums on the short term are lower. The implied volatilities for the bought options are higher. I just can't get the structure down exactly 100% where I want it. But I know that the search still works. The Mary put, we go back and test consistently. Yeah, well, consistently. Every 5 or 6 months or so, we go back and do a test on our default married puts for the Blueprint owners and Fusion subscribers. We always just go back and touch on it to say, hey, if we had criteria, if we saw a different list was working better than another list, if a different stock list started to perform better, or a different range of implied volatility range appeared to work better, we would add that. But so far, we haven't seen something that really stands out to really improve it. Stephen, we're getting into that zone, aren't we? And what do I mean by that? We had that conversation a little while ago, and we were talking about the leap calls there with Eric about repairing them. And Stephen says that now that the VIX is going back down into its lower levels, it's lower these days, is now a good time to look at new leaps for this type of strategy moving forward. Not as much as IV Crush from a couple of months ago. And Stephen, it probably is a decent idea if you're still expecting good growth in the market in the next 6 to 8 months. And I'm not saying you shouldn't expect that, Stephen. Don't get me wrong. I'm not making a market prediction. We know, why is the VIX going low? As well, things are settling down. Vaccines are coming out. Things are opening back up. We're very concerned, everyone, humanly. I don't mean us, the US government. Everyone's pretty much concerned of what's going on with India. It's starting to look extraordinarily scary. It has been for a while. Now it's coming more in light that it's worse than probably we originally thought or originally saw. Don't want to get into sensationalism there, but it's like way out of control, and it's something that's scary. We don't want to see that happen anywhere. But as this talk of recovery, this talk of opening up is coming back up in this case, and the market's more stable, the volatility is lowering. We're seeing gradual movement upwards in price. The VIX is lowering. So yes, but we're also, what are we doing? We're hitting consistently new highs. This sorts of, I won't call it the melt up in this case, but we're going up, and there's little hiccups here and there, but we're going up and going up. The market's overextended a little bit. And of course, as we talked about, we've been seeing some things back here on PowerOptions. Wow, it went to neutral. There was enough easing today. It had been at a strong sell warning, a bearish sell warning, 4 days ago. Come on, buddy. There you go. And then it was still holding off on the sell. There's bearish sell in 426 on Monday, and then it's been holding sell, but enough of that pressure eased off now to where some of those indicators went off of bearish to neutral. So it went back to neutral. But I was getting concerned that we're looking at a type of way in that case. We're looking at a type of way in that case where there might be, the market sentiment was almost ready, was almost giving me the signals that we're looking for a correction coming up soon. So I'd say maybe wait to after that. But this was enough easing off on the market. Yeah, my 3 stocks didn't do too well today. 3 of the 7 that I'm in. This isn't fully updated for the married puts, I mean. But I think it's a good approach. If you're bullish long-term on certain markets, certain sectors, Stephen, is a good way to say that, absolutely. Search for the long calls that are far out in time, but I'd recommend still using that % implied volatility range as well. Remember, and we talked about, I want to go back to the VIX here. We talked about the VIX is much lower right now than it has been in at least Sorry, folks. Let's go back to VIX, shall we? Perfect. So it's been up and it's been down. It's been seeing some spikes here. Every 60 days seems like it gets another spike. This is the 1-year chart. But we're down lower. But remember, we're still almost 100% higher than the low we've seen in the last 5-6 years. Just before things started with the pandemic, remember, the VIX was at 9. It was hanging out at 10. We're still at 18 right now. All right, we're not at 90. That's great. That was great for premiums, but we're not at 90 in that case. But we're down here. So that's what we kind of see. But just remember, 18 is low, and it's the lowest it's been in a while, but that's still 80% higher than the low it was keeping during, was that 2019, and back again in early part of 2018 as well, before those movements, Stephen. But yes, I would still use those filters there to go to that as well. Oh, and Eric brings up a good point I was going to bring up too, but I didn't get a chance to put some slides together. This is a thought by Eric, is that the robo app noise traders, with the robotic app, the what I call them, the trading boxes, black box trading, are changing the market. No more sell and may go away, crypto and greater fool's theory. Yeah, I don't think this is just like last year. Last year it wasn't sell in May and go away. Everyone was jumping in because people who were out of work were making their money in the market. We're trying to make money in the market. A lot of the people were. And I think that's going to stay the same for this summer, even though things are opening up and people are going to start taking vacations. But we're not going to see a sell in May and go away, at least not as strong as we had in years before in that case. I think we're all set. Well, ladies and gentlemen, we are at 6:06 p.m. Eastern time. I don't see any other questions that have come in. I got a lot of material and I got a lot of things to think about. I know the first two sections right off the bat are going to be taken out, not taken out, removed. I mean, the first two ones, what we're going to do, Eileen's question and the follow-up for managing and debit spreads, that'll be one presentation. The discussion we had on for Stephen about converting to the covered call will probably lump in with the discussion on the calendar spreads that we had there, the calendar put spreads we had for Gustavo. So we'll merge those two together, and we'll put our other thoughts in as well. All right, ladies and gentlemen, I just wanted to remind everyone, of course, that today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or trading suggestions. As we've seen in many cases today, options involve risk and may not be suitable for all investors. Well, today we had a chance to showcase some functions of the search tool with the percent implied volatility range and the default searches we mentioned that were back tested. We took a little bit of a look at the portfolio tools. We used the custom spread tool a lot today, of course, and we showed the research tools for quickly analyzing or grabbing the Greeks on your positions as well. Well, if you like the tools that you saw today, you want to test them out, just go to PowerOp.com. All you have to do is put in your name and email address. You'll have access to a full 14-day free trial. No credit card is required. And then, of course, after that, the monthly subscriptions start at just $45 per month. That's for the end-of-day data. The most popular level of a service is the delayed data service. That's $65 per month. Gives you access to all the tools, all 23 strategies, searching, analyzing, comparing our signature tools, of course, the portfolio and the alerts with 15 to 20-minute delayed quotes. Of course, we do offer a full set of historical back-testing tools as well. That's an upgrade from the delayed service, and we do offer a real-time service as well. You can upgrade at any time, and you can cancel at any time as well. There's no contract to stay on, so you can cancel or upgrade or downgrade at any time as well. Free education, remember, as we mentioned, you can check out that archived webinars page we looked at briefly today. Just go to powerop.com/webinars.asp. That is a public page. And you can scroll through most of the webinars and not even being logged in. But as we also showed for the question on the long calls, you can go right to our YouTube channel, look up Power Options, use that search function. I try to keep the titles with the strategy. So if you want to look up covered calls, poor man's covered calls, search for calendar spreads, you'll see a listing of our presentations for criteria, strategy ideas, management, and other discussions. You can check them out at any time as well. And of course, if you think of any other questions over the weekend, send me an email at any time to support@powerop.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. And of course, trial members and subscribers can schedule a free coaching session, essentially a 45 to 50-minute phone conversation with myself or Ernie. We walk you through the tools on the site and answer any questions that you have, kind of just like we do here, but in a one-on-one format rather than several questions.